Hi, everybody, and welcome to review of Procter & Gamble's fiscal year third quarter earnings. I'm Nolan Kamer, a portfolio manager and wealth advisor, and with me today is a portfolio manager and research analyst, Kyle Moore. At a high level, the results for the quarter were very much in line with expectations, with modest declines in sales and gross margin. Earnings grew 11% versus last year's results, and organic sales growth was up 1% for the quarter. Out of the 5 major product categories, 4 of them saw sales growth during the quarter, although 3 of them, beauty, fabric and home care, and baby and family care, only grew 1%. Healthcare was the best performer of the group, up 6%, and grooming was down 6% for the quarter. So Kyle, from your standpoint, what stood out fundamentally in the quarter?
Well, I think the quarter reflected a very difficult environment. This wasn't a huge surprise, as it's been an industry-wide phenomenon, and Procter isn't immune to the macro. They reiterated their guidance, but it looks like they're probably going to be coming in near the low end of the range. More specifically, they're continuing to bleed share in grooming and China baby. China baby has been kind of a self-inflicted wound, as they haven't had a competitive product there. Expect a new product release in August that hopefully will allow them to regain some share. So we'll be watching that closely.
Okay, interesting. How about, I know you listened to the conference call, combed through the transcript, did a deep dive there. What were some takeaways from that call?
So the conference call was interesting because management spent a lot more time discussing strategic priorities and emphasizing changes they're making, as opposed to actually discussing the quarter-specific results like they normally do. They were certainly giving the impression that there's a greater sense of urgency. They also highlighted a shift in the way they measure irresistible superiority, which may help in product development and drive top-line growth in the future.
So you mentioned the change in tone or urgency on the call from management. What do you think led to that change?
Well, it's hard to say, but as we sit back and try and kind of read the tea leaves about what's really going on, it's hard not to wonder if Trian, the activist investor, is the driving force behind this urgency. Trian's chief investment officer was on CNBC after Procter reported, and they acknowledged that they have been having active discussions with management, but there's actually a lot of common ground. They both think that Procter needs to be best in class in organic growth and margins, and how they get there is the key question given Trian's history, and it's hard not to think that accelerated cost saves aren't on the table.
I know they've mentioned some of that in the past, so I'm sure they'll keep focus on cost savings as they move forward. Finally, as we do with all stocks that we own, we take a look at the fundamentals, the valuations of the companies, and then technical price trends. So put your FVT hat on and give us kind of the outlook for the stock in your opinion.
So, well, the stock doesn't look cheap by most metrics, but this is a very difficult environment, so earnings are a bit depressed. We think Procter continues to move in the right direction, and if they can get China baby and grooming under control, and they continue with the basic blocking and tackling of taking cost out of the business, we think they'll come out stronger. We view Procter as a core long-term holding, but we'll likely need to see accelerated top-line growth and some share gains for the stock to move materially higher from here.
It sounds good. So we'll keep an eye on the stock as always. I appreciate your insight, and we'll be back next quarter to keep seeing how the trends and management keeps progressing. So thanks, Kyle.
Mariner Wealth Advisors is an SEC-registered investment advisor with its principal place of business in the state of Kansas. Registration of an investment advisor does not imply any level of skill or training. For additional information about Mariner Wealth Advisors, including fees and services, please contact Mariner or refer to the Investment Advisor Public Disclosure website at www.advisorinfo.sec.gov.